I feel like I'm seeing more deals on the market right now than I have in a long time. There are so many stocks that are just falling in value. And that is just great news for us dividend investors, as there is a lot of stocks to pick up on here in October. In case you're new to the channel, then my name is Casper, and here we strictly talk about investing and financial freedom. So if you like investing and if you're on a mission to retire early, then press that subscribe button below. Also, please leave a comment below the video and let me know what stocks you're planning to pick up here in October. But let's get straight to the first one on my list. And the first one on my list is Target. And Target has taken a huge hit here in 2023. During the last month, well then is Target down by 11%. And when you're looking at the year-to-date performance, well then is Target down by 26%. And that is a very substantial drop in share price. When you're looking at the right hand side of the screen, well then you do basically see that Target right now is trading right at the 52-week low, and that they have a forward PE of only 14. So right now the current price for Target is starting to look really attractive. Based on the performance of Target here in 2023, I would not be surprised by seeing Target dropping below 100 in share price. And if that happens, well then I'm definitely going to be buying Target, as that price is really hard to resist. The share price right now is starting to reach levels that we haven't seen since the beginning of the pandemic, and because of the substantial drop in share price, well then is the dividend stats for this dividend king starting to look really attractive. They currently have a dividend yield that is just above 4%, and that is the highest it has been since 2018. However, if the share price actually dropped below 100, well then could the current dividend yield actually be higher than what it was back in 2018. The payout ratio is sitting at 59%, and that is somewhat average. And for a company like Target, well then that is really good, because it means that they can easily sustain their current dividend, and they even have room for improving the dividend in the future. They have a 5-year growth rate of 11%, and that is absolutely insane for a company that has a dividend yield of 4%. And the most impressive thing about Target when it comes to the dividends is of course that they have been able to increase their dividends for the last 54 years in a row, and that officially makes Target a dividend king. Overall, then is the current price for Target looking really interesting, and I might have to do some further research myself, as I do find the price right now to be really attractive. However, if it does drop below 100, well then I'm definitely going to be buying Target. Not only is the current valuation for Target looking really promising, but they are also a dividend king, and that means that most likely then will Target keep on increasing their dividend in the years to come. And that makes it even more interesting. So moving on to the second stock on my list, and here we have Realty Income Corp. This right here is a REIT, and that is a real estate investment trust. These companies are a bit different from the normal companies because they are obligated to pay out 90% of their net earnings to their shareholders, and that makes REITs a really good vehicle for passive income. REITs are basically real estate companies. They own a bunch of real estate, and they basically earn money by operating these and leasing them out. And this company right here owns more than 11,500 properties all across the US. This is definitely one of the best REITs out there. But here in 2023, this REIT has taken a heavy hit, and that is most likely due to the increases in the interest rate, the inflation, and the consumer demand, and so on. During the last month, well then has Realty Income Corp dropped by 10.5% in share price. And when you're looking at their year-to-date performance, well then they're basically down by 21%. Just like Target, then is this company also sitting at the 52-week low, and they have a current P to FFO ratio of 12, and that is somewhat comparable to the PE ratio for a normal company. So the price right now for Realty Income Corp is looking really good. I have owned this REIT for several years now, and I've been really happy with the performance of the REIT. And because of the recent drop, well then I've actually bought even more shares in this REIT here. But now we've talked a bit about the performance of Realty Income Corp, and then let's move on to the dividends. And the dividends is really what makes this REIT here really attractive. They have a dividend yield of 6.11%. It is not very often that you see companies having a dividend yield that is above 6%. The payout ratio here is also sitting at 74, and even though that might seem a bit high, then it is actually pretty normal for a REIT, because they, as I mentioned before, are obligated to pay out at least 90% of their net earnings to their shareholders. They have a growth rate of nearly 4%, and that is absolutely amazing when considering that they already have a dividend yield that is above 6%. Increasing that even further is completely unbelievable, and that is what makes this REIT here so extremely good. They have also been able to increase their dividends for the last 25 years in a row, and there is nothing indicating that they're about to stop doing that. They are actually indicating that they will continue doing so, and that is also what I believe they will do. So based on the dividends and the current valuation, then is this REIT here a really hard thing not to buy here in October. A good thing about REITs is that it's a relative safe investment, because they basically have so many tenants living in their buildings, and they are earning so much cash every single month from the monthly payments from the tenants living there. And that makes the REIT really good for passive income and for dividends. So moving on to the third and last one on my list is UPS, or Unit Parcel Service. And this company has, just like the other two, taken a huge beating here in 2023. They have been really challenged by lower earnings than expected, and that is due to a significant decrease in consumer spending. They have also been negotiating with unions in order to make a new labor deal, and that has finally come through. However, it also had a negative impact on their performance and on the share price here in 2023. But let's have a look at their performance. And during the last month, well, then they're down by 11%. And year to date, they're down by 13%. So that actually means that this company has lost the majority during the last month alone. And that actually means that UPS could potentially be the perfect buy right now in October. And when you're looking at the right hand side of the screen, well, then we do see that just like the other two, then is UPS sitting at their 52-week low. They have a current PE of 16. So right now, then is the current valuation for UPS looking really attractive based on those numbers. And just like we talked about with the first company, Target, then has the decrease in share price also increase the dividend stats for UPS, which essentially means that you are actually getting more value per share right now than what you did before. The current dividend yield is 4.27%, and that is honestly really high, and the dividend yield haven't been this high since 2020. The payout ratio is sitting at 55%, and that is also really good, because it again means that they're easily able to sustain the current dividend, and they also have room to potentially increase the dividends in the future. They have a 5-year growth rate of 12%, and that is really amazing when considering that their dividend yield is already above 4%. They have also been able to increase their dividends for the last 13 years in a row, and they will most likely continue doing their best to keep on increasing this dividend in the future as well. When looking at the current valuation for UPS and when looking at the dividend stats, well, then it is really clear that this company right now is trading at a really good value. So I'm definitely going to be looking more into this and potentially buy it here in October. That was basically all I had today. I hope that you learned something from today's video. And if you have any plans to buy any stocks here in October, then don't forget to leave a comment below and tell me what stocks you're looking for. I hope that you liked today's video, and if you did, then don't forget to smash the like button below and subscribe to my channel for more weekly videos just like this one. See you guys in the next one.